Welcome to Global Financial Engineering. I'm Dr. Glen Brown. In this lecture session for today, the 24th of February 2023, we will go over the Global G7 Combo Trading Strategy. You will recall in the previous session we have set up a stimulated account and we have loaded the respective pairs, which is the 7 major currency pairs and the 6 subsystems of the Global Algorithmic Trading Software. We have defined the risk parameters in terms of taking a stop loss at 1 time the daily average true range using period 7 so that it is more sensitive to the daily volatility. We have defined the risk of risking 0.1% of free equity. So when we combine the percentage risk of 0.1% along with the stop loss of 1 time the daily average true range, and that will give us the position size. You'll also recall that we had an account for 20 million, and we're going to continue to look and see what have transpired over the last few days. The market have been very volatile over the last few days, to be honest. And we would have experienced some stop out trade based on the fact that 1 time the daily average true range is technically at the edge of the daily range of trading. So any form of widening of spread would definitely affect the system. And maybe I want to put on record that if in case you are trading similar system like this and you realize that you are getting frequent stop out, then the recommendation is this: I'd recommend for you to change the period to 25 and take the multiple of 25. That's what we're going to call the initial risk, the hard stop then, if you want to call it that. But we still will not change the percentage of 0.1% of free equity. And what will happen is that the position size will be adjusted so your risk percentage remain constant. In truth and in fact, based on our research and my methodology and style of executing trade in the global financial market, I want to create a framework of what I deem as maximum risk. And I want to assign them to multiple time frames. So as you'd have known, we here at Global believe in the laws of multiple time frames, especially in the fact that each time frame has its own structure. You'll recall that the system that we demonstrate a strategy on MetaTrader 4. And MetaTrader 4 have some defined time frame. We should have been the 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hour, daily, weekly, monthly. And therefore we could take that and create a conceptual framework in terms of risk management on it, where we can define the maximum risk on any time frame. So I would probably say that the maximum risk on any time frame would have been 25 times the average true range of the period. So you'd have set the period to be 25. And on the 5 minutes, the stop for the 5 minutes, the maximum stop or the maximum points you will allow a trade to move against you is 25 times the ATR of the 5 minutes. The maximum you will allow the trade to move against you on the 15 minutes is 25 times the ATR of the 15 minutes. The maximum you'll allow the trade to move against you on the 1 hour would have been 25 times the ATR of the 1 hour. So just in case, the default risk that we are using for the G7 combo is 1 DATR, or 1 time the daily average true range. But if market condition change and market get more volatile and you see a series of stop out, then you could increase the stop by using a multiplier factor of 25. And then what you'll find is that you will also trail by 25. But in the Asian session, or in session of lower volatility, it's going to compress, contract, and you'll have adjusted stop according to that. And then later on, you'll realize that it's still average back to the 180, but instead of you get stopped out in the middle of the trading day, the trade would have been adjusted and put the stop outside the noise. We want to look at that in further lecture. Before we get over to the system today, something that's important before we, for me to put here is for us to disclose the risk warning for you. We note persons who might be watching some of these might have a problem in terms of eyesight where they're not able to see fine print. So I will direct you for the risk warning, which is very important. You must know about the risk in any activity, especially in the financial market. So if you go to our website, globalfinancialengineering.com, in the search box, if I just type in risk disclaimer, you're going to see a series of them pop up. You can take the first one. So let me bring to your attention the risk disclaimer. Very important. I'm not going to read it. So what I want to do, I want to put it on screen. For persons who are not able to see it, you could go directly to globalfinancialengineering.com/disclaimer. And I'm going to leave maybe a few, maybe a minute or so for you to go through the first page. It's 2 pages. So we're going to pause the video at this stage and allow you to read through this. Or you could pause the video and read through it. And then we head over to the main session topic. Alright, so hope you have paused that. I want to continue from where we have trading result and scroll down so you could see the full disclosure. So it continues there. And then the latter part of it, I want to spend a little time to discuss the CFTC Rule 4.41, as this is applicable to this session. While we are using live data feed, and while we are stimulating trade in live account, in this particular account, we should assume the trade to be hypothetical. Okay? So as indicated in the first session, we are using this strictly for educational purposes. The idea is not to hype any particular trade, but to demonstrate how one could use the software to configure various strategies in order to aid their decision making. It should never be deemed as investment advice, could never be deemed as an invitation to invest in financial market. You should do your own due diligence and make that decision independently. Okay, so now I would have assumed that you have covered all this. I will also run through the basics outline of the strategy. And yes, we have it on this link here. You'll see the Global G7 Combo Forex Trading Strategy was developed by Dr. Glen for his global multi-asset class professional proprietary trading firm. And here in this strategy, we are using the 7 major pairs: the Euro USD, USD Japanese, GDP USD, USD Swiss francs, Australia USD, USD Canadian, and New Zealand USD. Only these 7 we are using. And what we would have done here is to add each of them to the Global Algorithmic Trading Software, and we are using just from System 1 to 6. So technically then we are using Strategy 2 to strategy 7. We are risking 0.1% of free equity, and we are using a trading stop as well as a hard stop of 1 time the daily average true range using period number 7. And we are also using a normal trading of 35 pips, which is 350 points, if in case we have this parabolic move, as we normally have, especially in news announcement, then we are able to lock up. There are some disadvantage with that though, but that's how the default strategy is set up. So we are, in this session, we're just focusing on the default. I'm not going to go through all this here. There's an equity curve that is real-time pulled from my Forex book for trade analysis. We're going to look at that in additional session. And yes, we also have the risk disclaimer here on this page again. Okay, so what I'm going to do then, I want to hop over to my platform. And what we are going to do is to look at the status. I think in the last session, we have a positive ending balance with a few trades. I think maybe about 17,000 or so. Not so sure about that. So we're going to look and see what the current status. We're going to look at a few of the trades. We're going to look at how the trailing stop is applied. And again, note we can adjust the stop loss if necessary. So let's hop over to the platform, and yes, I want to you'll have seen the 7 pairs, 1 2 3 4 5 6 7. These are the only instruments we are interested in. You will note on the MT4 platform, M1 for 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hour, daily, monthly, weekly, monthly. Our strategy is embedded in this framework. So our system 1 run on the 5 minutes. The base system is the 1 minute. We're not using the 1 minute. It's going to use up a lot of resources. So to avoid that, we're going to use the 5 minutes, which is system 1, 2, 3, 4, 5, 6, or we say strategy 2, 3, 4, 5, 6, 7. Okay? Just to recap again, we are using a risk model of 0.01% of free equity, along with a stop loss of 1 time the daily average true range period 7. We're not going to go into the trade logics here. I just want to note that we'd have noticed that our close balance is 20,034,658, but our floating equity is 20,099,000 plus, and this is important. Sometimes you might find that your balance is greater than your equity. In truth and in fact, we don't really want to live like that. We prefer the equity to be greater than the balance, because the equity is really the real-time money you will have if you close out all trade and liquidate the portfolio. Okay, but I want to point out a little bit of a difference, since most persons used to manual trading. Here at Global, we invest heavily in softwares and program most of our strategies. So we really don't press buy and sell like what most of you would have done in the in your normal trading. For example, in the strategy global trend following trading strategy that we give you free access to, you'll have to make manual trades. So you'll have clicked new order and place your buy and sell here. We don't have to do that. The system automatically execute the trade. Importantly, I am on system 1 using the Euro USD, and it's running 5 minutes. You'd have known at the bottom here, you'd have seen what the stop loss is and what the lot size is. So the lot size is automatically computed based on the 0.01% of free equity along with the stop loss of 1 time the daily average true range. Okay. You'd have noticed as well that here I have a trailing of 350 points. Okay, is a 5-digit broker platform. So instead of using pips, we say points. Inside the software, Global Algorithmic Trading System, you'd have seen on the upper left-hand side, this is where we do all the configuration. I'm not going to go through this here, but this is where you make your decision now. What do you want the software to do? So for example, I want the software to only risk 0.01% of free equity. Okay? From that, it will also give me a reward to risk ratio of 3 to 1. So for every dollar I risk, I'm aiming for 3. Note I said aim. It doesn't mean I'm going to get it. My risk in terms of my stop loss is 1 time the daily average true range using period 7. So I program this in this. I will also program the trailing stop in it of the 350 points. I call it normal trailing, so trailing order. But before I reach the 350, if it moves in my direction by even 1 pip, the system will automatically adjust the stop. So you see, our 1R, which is our risk, let's assume that the 1 DATR is our risk. As long as it moves in our direction, that will be adjusted by the fact that we are also trailing by 1 time the daily average true range. But based on the strategy, we are saying if it moves in our direction by 35 pips or 350 points, then the software should move it to break even. This means that we are removing the normal risk from the trade. Now, if in case it continues to move in our direction, we will start to lock in profit. So that's a big difference. Instead of you doing a manual trade where you have to be at the machine or periodically return to the machine to do these adjustments, then the system, as long as you program it, you'll be able to leave it and it will work according to the setting that you put in it. Okay? And yes, you are able to do all necessary change in terms of adjustment to the system. Okay, so we are doing this lecture in a live market environment. We have some news announcement just coming out, so you're going to find that we could have some form of delay in the platform movement, as you have seen here. Now you'll also see down here where we put the 7 major pairs. So Euro USD, GDP USD, USD Japanese, USD Swiss francs, USD CAD, Australia USD, New Zealand USD. So this would have been system 1. System 2, you'd have seen on the 15 minutes, we continue just like go right along. System 3 and the 30 minutes, we go right along to the daily. Okay, so we would have set up all of that on it. Now I want to talk to you a bit. Let's look at since we might have a little freeze on the platform here now. Let's look and see what happened. This red line that you see here, this is the 35 or 350 point trailing activated. So we'd have entered the trade on this green line. Price move in our favor by 35 pips and more, and then we start to lock in. So while the price is here, we are locking in 35. We are trailing by 35 pips. So the distance between the price now and the stop loss will remain at 35, and it will trail and still stop out. In volatile market condition, you could find the 35 pips might be inadequate, but our objective here is just to focus on the default setting, and later on we could look at how we manipulate the setting based on market condition. So if you notice, we had indicated to use 0.01% of free equity, and we have set our stop to 1 time the daily average true. Remember, we are using period 7. So what we're going to do then is just to look and see on a few of them what the current situation, and look and see what the how the equity curve has advanced from our first session. Okay, so we're looking at the
settings, and I've gone through the setting here. Maybe for the rest of the session to be more meaningful in terms of just getting a bird's eye view of the current status, and instead of going through each of these individual charts, the fact that we send the data to my FX book, where we are able to look at matrix like maximum adverse excursion, maximum favor, and look at profit factor. I want to go over to that feed now that would have captured all of the trades up to the 24th of February 2023. It's a good platform. We're not recommending any advertisement what you see there. We just use it to aid our trading decision. And you'll have seen some economic data news coming out, so maybe I want to hop over there just to introduce you to that too. Yeah, so let's look at what have transpired for the day, and then we come back. So you'd have seen these are the real-time equity position. We have just updated 45 seconds ago. So the equity would have been 20,133,270.56. You'd have also seen the rapid move this morning after the PCE comes out to be greater than expected, and that would have pushed some of our trade. Let me go down to look at the open position. So there are 26 trades open. You can look on each of these trades which system they were executed from. Let me just go up top a bit. Okay, so if I put my mouse here, I would have seen system 240, which would have been system 5, which is strategy 6. You'd have seen that this was a short position in the New Zealand USD, 6 lots. Open price was 0.6216. Stop loss so far would have captured 29 pips in terms of trailing stop, and this is the floating profit on it. Total would have been 55 pips, but we're trailing by 35, so the stop loss would have moved to capture 29. We would have also realized that apart from system 5 executing a sell on the New Zealand USD, then our system 3, that's the GTS 30, also execute a sell, and this was for 12 0.21 lot, it was executed at the same price, and hence the trailing would have been the same. I want to talk to you a little bit about this. Remember, we talk about the stop loss, maximum stop loss allowed is 25 times the average true range in previous session. And while the default stop for this system is 1 time the daily average true range using period 7. If in case you notice that you're getting a lot of stop out where market get very volatile and the liquidity provide a widening spread, then one of the first adjustments you'd have done to the system is to change the 1 DATR to either 2 DATR, or if you want the stop loss to be a function of the trading time frame, you will have changed the period to 25 and use a multiplier of 25. Yes, you could still activate the trading of 35 pips at 350 points. And that's what happened here. So these varied lot position is based on the stop loss. So when it was varied to 25 ATR, the stop loss on system 240 would have been wider than the stop loss on system 30, that S30. So what it means that the position size would have been greater. If we go down to the Australia UD, another short position with 9.45 standard lot, we are now locking in 47 pips, sorry, 7.5, based on the fact that we have gone 74.6. The profit target is 191. So we're looking for 191 pip here. And we could see a list going down similar to these. This one is coming from system 2, that's the 15 minutes, and another sell position on the 1 hour. You'd have noticed that I explained to you that we apply multiple system on each of the instrument taking the G7 currency pair. So you'll find a lot of trade executing, operating within their own time frame, piling into this. And that's the reason why currently we have a total of 138.19 standard lot executed on this. And the floating profit, 79,295.5. In terms of the number of pips, floating will be 1,312. Now, there's nothing guaranteed here. We have seen a total of 204 historic transactions so far. We don't want to go deep into it, that we have a session that we're going to discuss it. But I want to bring to attention why we use some of the advanced matrix that we use, like the MAE and the MFA. And for example, we would have seen how the journey of these trades. You would have seen the maximum adverse move against a position that turned into a winner was 78.3. We can use this later on to adjust and to optimize the system. But I'm not going to do that now. But that's to show you the reason why we want to get these matrix. Okay, so we need these matrix so we can do adjustment. So we'll see that we have a trade move against us by 78.3 pips, and the outcome of that trade was 61.3. If we look at this trade, we have a trade moving against us by 60.9. Outcome was 42. We could also go to look at the overall, the maximum move against any position was 87.9. We could use this as a guide to say, if we want to reduce the adverse move against them, then we could adjust the stop loss. So for example, while these are pretty wide, we could decide that, okay, if I come across, if I put my stop at, say, let's put it to this line, say 45, 50 pips, I would have avoided all these drawdown against me. Okay, so we could really see it to optimize it by reducing the stop loss. Again, I will look at
another session. This is a little bit advanced into how we use the data. We could also look at the duration of each trade, how they last, okay? We could look at the possibility of the system losing various percentage, okay? So, for example, what's the probability of the system losing 10%? If you look down here, you'll see it. Let's look at it. Possibility of the system losing 10%. There is a 0.01%, less than 0.01% chance of losing 10% of the account based on the data that it have gathered so far. But for that to happen, then we'll have to have 1,087 trades moving against us consecutively to lose 10%. Why this? Because of the risk model that we are using. Risking 0.01% of free equity. Let's move up a bit. What is the probability of losing 20% of the account? Wow. Is less than 0.01. So 0.01% chance of losing 20% of the account. How could this happen? We would have to have 2,174 trades moving against us consecutively. And how could we lose 100% of the account? Wow, we would have to have 10,870 trades moving against us. How could we lose 40%? 0.01%, less than that. We'd have to have 4,348. This will lead you to one of our beliefs that entry is not important, or should I say entry is not that important. Exit is also not that important. What is the most important element of a trading system is how much. How much do you put at risk when you enter a trade? The truth is, 100 trades should not have any material impact on your account balance. And that's the reason why you have to do it for the long haul. If 6 trades have a material impact on your account, you are overtrading. But yes, we do understand that some persons don't have the capital to put $20 million into a portfolio to trade it. And then if you start, you have broker who give you 500 to 1 leverage. And leverage is a double-edged sword. But later on, we're going to go deep into this, yes, to show that it's not about the entry. It's more about consistency and how much. How much do you risk when you enter a trade? Also, the frequency of your trade. So we could look at, say, if you look at System 6, you wouldn't see a lot of trade executed from System 6. So the frequency of the trade is important. We could also look at how the trade work out on a day-to-day basis. And this is by getting all these data over here, okay? So you could see the losing days and the winning days, okay? You could see, like, for example, on Friday, we have 93% of winning trades. So maybe Friday is a good day to trade, okay? If you look at Thursday, we are just getting 60% winning trade, okay? If you look at Wednesday, but overall, we would have seen that based on Monday to Friday, we should be trading each day. There's no holy grail in this business, so you're not going to find a system that never generate losing trades. In my opinion, though, I think this is too early. We have only gone 204 trades. For you to have any statistical significance, the minimum number of trades that I would want is 5,000. Okay? So any data point less than 5,000 trades is immaterial to me. So after 5,000 trades, we can start to do some little bit of a tweaking. Okay? The larger the sample size, the more reliable the data. Let's look at hourly. We can also go and see what type, time of the day. So we could look and see maybe in the 15-hour belt here we're getting a lot of trade, 100% winning trade. This is maybe one of the time in which we catch a trend. Okay, you could look at 1700, very pretty low, 32% winning trade. Most of them are losing trade. Okay, you could also look at 18. Okay, 94%. So this gives you an idea how we could navigate that. In summary, you could also see how each trade perform. I'm not going to go through all these data now, but this is just to give you an idea. Why is it that we send these signal over to these platform in order to get an overview of what is happening. In terms of the summary window, beautiful summary window here. You look at the total number of trades, as I said before. The profit factors thus far, 1.61. Still believe 204 trades, 203 trades is not enough in order to stick to this, but nonetheless, it's greater than 1. So I normally say a profit factor of over 1.2 is tradable. Okay, we need some more data to get measurement like Sharpe ratio. And the Sharpe ratio is used to characterize how well the return of an asset compensates the investor for the risk that he or she decides to take. And normally, higher the value, the better it is. Okay. We also have a Z-score, probability. Look at the probability in this system. We're saying in this system, there's a 99.99% chance that a profit will be followed by a profit and a loss followed by a loss. What the expectancy of the system? Well, expectancy thus far, as I said before, limitation, just 203 trades. In my opinion, it need more to put any major reliance on this. But expectancy is a matrix that tells us, tell you what you can expect to make or win from each trade. And based on the data thus far, 203, we're saying the account is expected to make $267.23 on each trade. Okay, later on we'll get things like the arithmetic average all-in period and give you the average all-in period return. Okay, we need more data for that one, and we also have the geometric average all-in period. Over the side, good to look at the average losses. Average loss is 29.46. Okay, average win 20.22. Need more data. I would like to see the average win coming about maybe 1.5 times the average loss. But again, this 203 trades, 204 is not too much material for us to, take any statistical significance of this. Our winning percentage is 76%, 76%. Again, this I believe need a larger sample size. On average, each trade tend to last for 9 hours. I could see historical. The worst pip loss was 87.9, occurred on February 22. That's 2 days ago. And the best was 88.3 occurring today, and that was based on that economic data. The worst trade was February 15, losing 9,082 on that. All right, so what we have seen then is enough for us to take a break from this. To conclude, we have equity balance running 20,133 to 70. So this is a profitable trade. Again, this is 20 million. So a profit of 55,000 close so far. We prefer to use this risk model when we have such a huge account, okay, as we want to control the drawdown. The drawdown is 0.2%. Think this is great, but again, the data, the sample is a little bit too low for you to make that assessment. Now, we are a systematic trader. And what it means that while we know that the fundamentals play a major part in market move, price action, we don't really want to pay too much attention to them, as we don't want to trade from our guts. But each day we monitor the economic calendar, and the economic calendar will give us an idea of what we expect each day. So I want us use this as an opportunity to look at what happened today in terms of the February 24th, okay? Starting from the European session, we have the GDP for Germany, and this coming out at 0.9%. The consensus was 1.1, so this is lower than expected. Also have the growth rate coming out at negative 0.4. We had expected a negative 0.2. Then we have the consumer confidence, and this normally have a high impact, coming out at 30.5, expect 30.4, so worse than expected. For Switzerland, non-farm payroll was 5.398, pretty close to consensus. And the confidence in France coming at 82, and you expect 80. Then we have Austria coming out, the PMI 47.1, lower than expected. The other major news announcement would have been in the US session, and this what generated a high impact move. Personal income spending, you'd have seen the consensus versus what happened. You'd have noted that this was worse than expected. Personal spending month on month, better than expected by 0.5. And then we have new home sale coming out at 7.2, better than expected. And these are the drivers that we have seen in the market today. So this massive move was triggered by some of these fundamental data. Okay, so this will lead me to the end of this another session. We will continue to use this account to make commentary and to teach you how you can use the Global Algorithmic Trading Software for trading decisions.